Tesla had $360 million worth of calls come through, and we're going to go over in this video why that is unusual. We're going to be talking about why I opened a bullish position on Tesla today, and we're going to go over the exact trade. I had a really good day. The beginning of pretty tough March was a phenomenal month. You guys can see here we've had a lot of red days. Not big ones, which is very good. Today we close out a $24,000 profit on the day, closing a lot of really good positions. You guys know we covered this on the channel actually, talking about the S&P 500 and puts the past couple of days. We actually came down into this target, and with CPI coming in hot today, you see that Tesla pulled back pretty significantly, down 2.89%. And I think that the low we'll probably see is worst a gap fill. This is what I was expecting down here to about 165. And then maybe from there, we'd bounce and move our way back up. But big money is buying a lot of calls, and these are confirmed calls, meaning that they're coming in on the ask or above the ask. And this is really big because it doesn't mean that the stock has to go rallying or pushing up tomorrow. Something that I think a lot of people don't realize is that the derivatives market, which is the options market, does not directly affect the underlying stock. So if there was hundreds of millions of dollars, shares coming into Tesla, that would push the underlying up. And then the underlying would obviously move the options contract, would move the price of the calls. But when we see a lot of call options coming through, that's not going to move the underlying stock. And this is actually a good thing. People don't think that this is good because they're like, oh, well, if we have calls coming in, I want the stock to go up. But funny enough, that's not what we want. We want to see calls coming in, and we want to see calls coming in predominantly when the stock is cratering, because that gives us an indecision in the market or a discrepancy in the market saying this is odd. Why are they just burning money? Why are they throwing money away, which hedge funds don't do, but why are they throwing money away here? And in most cases, they're not. You saw that with Google. If you guys remember, about a month and a half ago, we saw this big pullback and they were buying hundreds of millions of dollars worth of calls down here. And literally the price of the premiums were down 90%. They were just hammering away buying them down here because they knew and they were expecting a significant bounce. They want to be buying it undervalued and underpriced anyway. A lot of people have been asking that if I think that SPY is going to continue to potentially go down over the next couple of weeks and months, then do I think that Tesla is going to tumble with it? And the short answer is no. I mean, it has been moving inversely from the S&P 500 for months. So there's definitely a good chance that if earnings is strong, and fundamentally we have great guidance, a lot of things have to happen for this to actually line up, but that Tesla could easily run back up to 212, 230, 240 while the S&P 500 sits sideways or maybe even sells off a bit. The pattern that we currently have in play right now is a bullish harmonic shark, which is right about 75% of the time. If we come in here and we switch this to only see the bullish shark setups, you're going to notice that at the bottom left, we're going to have our indicator change and show us all of the returns and what we would have gotten. So obviously in this one with our shark, we have a 106% return playing this pattern over the past 10 years on Tesla. So it doesn't mean, of course, that we're going to push right back up, but still 76% of the time, I'm going to take that trade each and every single time that it shows up. And that's why we've been playing Tesla off of these levels here at 160. So I do think that there's a good chance that worse will pull back down to fill this gap at 167. But I think that as long as earnings is good, we're going to see this move back up to our target of T1 of about $188. Now, the last thing that I want to show you guys is going to be our break of structure to the downside, because we had this bearish position that showed up here on Tesla back in last quarter where we sold off, we broke structure here, and you can see that over the past 46 times that we've had this pattern happen, 30 times out of the 46, so very accurate, 30 of those times, we sell off into a lower low. In most cases, once this lower low is taken out and we make this move, we get a bounce right back up. That area usually is going to be at the 0.618 Fibonacci. So if we take a fib from swing high here at 206.25 down to swing low of 160 and pull it out to the right, you'll notice that that 0.786 is up around 190 to 195. So I think that we could easily see this move back up into this range within the next couple of weeks and couple of months. Now, the last thing is that a lot of people ask me when we're drawing Fibonacci's, how do I know what level to look at? The fastest and easiest way to explain is that we want to be looking at most recent high and most recent low. The reason that I would draw the Fibonacci from this level instead of taking it all the way up here is because this is more recent of a high than this high. And obviously our most recent low that has not been taken out is down at 160. I hope this helps, guys. Go follow me on Twitter. Get access to all of our free resources. We have 4 free courses that I will link in the description on options, technical analysis, risk management, and trading psychology. Thank you guys for all the support. If you want to trade with me every day and learn from me personally, check out our private academy. Link is in the description.